All right, Home Depot shares moving a little sideways, actually up a little bit. This after the company beat on the top and bottom lines. But here's the thing. The CEO sounds better than he did in February, right? Saying that their core consumer is resilient. The report comes just a week after retail sales surprised many folks out there. I mean, it continues to hold up and hold up pretty nicely this year. Now, whether it's the consumer or the stock market, my next guest says resilience has kept him constructive. I'm going to bring in now Hennion Walsh, their asset management president, CIO Kevin Mahn. And Kevin, in your most recent note, you mentioned inflation.
Yes.
That's been a big theme of today's show, but also the resistance of consumers. The resolve of consumers. So, how surprised are you that the consumer continues to just show up? Just no matter what the headlines say.
In a word, very. I'm very surprised at how resilient the consumer has been, the economy has been, and the markets have been, given rising oil prices and given all the geopolitical uncertainties. Last month, we saw that retail sales rose another 0.5% in line with expectations, the third consecutive month of increases. And they haven't done that necessarily by adding that much more outstanding credit card debt.
Right.
Outstanding credit card debt last quarter came down and delinquencies haven't gone up. So the health of the consumer appears to be pretty strong right now. But the longer those oil prices stay above $100, the more and more of an impact it will have.
And to your point, I saw miscellaneous, which are like flower shops, electronics are through the roof, even eating away from home, that's holding up pretty good there. So, so again, it's just until it breaks, it doesn't break. Let's talk about breaking and re-breaking, putting things back together.
Yes.
Your new Mag 7.
Yes.
The Air 7. Okay, so out. Meta's out. Apple's out. Amazon's out. Tesla's out. Microsoft out. One thing I kind of feel that they have in common, ironically, is that they're consumer-facing, a lot of these businesses.
Yeah, so I'm trying to focus less on who's spending the money, and I'm trying to focus more on who's receiving the money. So as opposed to focusing on the hyperscalers or the semiconductor and chip plays, mega cap technology, let's look at some of the other ancillary benefactors within the AI ecosystem, whether it's a memory provider like Micron, how about a data center like Digital Realty, a cooling solution provider like Vertiv, an energy provider through utility like AEP, and then, of course, how can we not talk about Taiwan Semiconductor, the largest dedicated chip foundry in the world, whose largest client is NVIDIA.
Right, yeah. I mean, so, and by the way, since you debuted the Air 7, it's been doing pretty good.
It's been pretty darn good. We're sticking with it, Charles.
All right, let's talk about the other center of the universe, if you will, and that's NVIDIA. Yeah. So just folks, so you understand, for the quarter, $1.77, that's been where the street's been for about 2 months. But I'd like to look further out. For the year, just 3 months ago, the street was at $7.75. Now they're $8.37. For next year, $9.96 is $11.57. So generally, the earnings estimates are going up. That puts a lot more pressure on them to have a blowout number tomorrow after the bell. What are you expecting?
I expect another record quarter of earnings and revenues. Revenues are forecasted to grow 80% year over year. But you know what investors are going to do? They're going to say, ho hum, big deal. It's NVIDIA. They always set new records. So it's forward-looking guidance, and it's also their rollout schedule for the Rubin chip, because now we heard with the Cerebras IPO the other day that they got some competition in these chip space, and NVIDIA is going to have to step up.
And ironically, Cerebras is up today because they may fast-track them for the S&P. Again, sort of validating that they're a legitimate competitor. By the way, those chips are going like
huge.
Have you ever seen this? Right. I want to ask you about this momentum rally. Yeah. Because this has been a huge rally. You've had a few of them, right? There have been 11 times the market has rallied like this. The momentum has since 1980, 20% run. But history suggests we may be getting just a little bit toppy here. Are you concerned that maybe, there's a pause here? Maybe there's a pullback at some point soon?
We're hitting into a difficult stretch for the markets historically between May and October in a midterm election year. We also know that we're in a month where generally Wall Street professionals say sell in May and go away. Right. But I still think investors should stay in May and let AI lead the way. And we're going to hear from NVIDIA tomorrow that the AI revolution is indeed alive and well. Yeah. So don't try and time the market and go to the sidelines if volatility.
No, I agree with you. We dip, but don't don't try to pick the top, because anyone who's done that in the last couple of years regrets it right now.
Yes, sir.
So biotech was killing it, crushing the S&P until just recently. We pulled back a little bit here. You talked to me about this before, in part because of acquisitions. the issues with these drugs, these drug patents. There's a crisis there. You've got two small biotech names. We're going to bring up the table here. I want you to just tell us briefly why you like these two names and how do you pronounce them?
Sure. First one is Allogene Therapeutics, a very small cap biotech company, market cap less than $1 billion. They're developing T-cell therapies to treat blood cancers and solid tumors. Alkermes PLC is a larger cap biotech, around $5 billion in size, but they're developing treatments for central nervous disorders such as addiction, such as depression, and such as schizophrenia. I think both of these companies are likely candidates to potentially be taken over.
Do they have products on that they're selling now, or all of this stuff sort of phase 2, phase 3?
Yes, each one of these companies has at least one drug in level 2 or level 3 approval status with the FDA, and our research shows that large cap pharma tends to swoop in and buy these healthcare innovations when they're in level 3.
Right. They don't want to wait until after the drug has been approved and there's new drug approved, because they're going to pay a lot more for it. All right, so just 10, 15 seconds to go. You're calm, pretty calm, cool, and collected.
Yes.
You're okay with this market rally. Again, a few bumps in the road, but you're still staying the course.
I believe that. I think there will be more short-term bouts of volatility ahead, but I think AY will continue to lead this market forward, and it's wise to stay invested in the market.
Great stuff, Kevin. Really appreciate it.